Good morning, folks, and welcome to a brief morning update with regard to the S&P 500. We're going to talk about the price of gold this morning as well as the US dollar. Then we're going to segue into some gold member stock chart requests, and we have some good ones. All right, so let's begin with the E-mini futures. We are up slightly on the day, about a point. We were higher. We pulled back a bit. You can see that we're pulling slightly off of the highs of the session, 4-hour chart. Now, the 4-hour chart is looking pretty good. A fairly tight bull flag formation. But remember, folks, this market is very overbought. That doesn't mean it can't go higher. We have earnings coming up this week. Alcoa is going to announce. So they will probably push this market higher up and into earnings in anticipation of a strong quarter. Once earnings are reported, midway anyway, through the earnings period, the markets are going to have to decide, is the stock market overvalued, fairly valued, or undervalued? So keep those trailing stop loss orders tight. Let's talk about the US dollar. So overnight, the dollar did something that was pretty bullish. We were in a trading range as noted by the yellow bands here. Pennant formation, and we broke out overnight. Then we broke out above a more significant upper band of resistance. At current, we are retesting the breakout point. So this price action on the US dollar has me a bit nervous as we move into the new trading day with regard to gold and the gold mining names. Gold, it was down lower. The last I looked, it was down around $3.10. It has rebounded some. Now it's down only 90 cents. We do have a nice potential bull flag formation forming. We're attempting to break out right now. But if the dollar continues higher, it's going to be difficult for gold to rally. So keep an eye on the dollar. Caution flag is on the track. Bitcoin futures, we have obviously pulled back off the highs. We may just retest this breakout point here in white line chart. It was resistance here and here and here. It broke out on the 5th. A good rally, healthy pullback. What I would be looking for is a rally up and through this upper band of resistance or a pullback to the support level. You could buy it there. If we break down below it, I would consider stopping out of the position. If this breakout point holds and now acts as support, I would look to add more on a breakout above this upper band of resistance because we should rally in the next couple of trading days. Let's go to TradingView. So this chart here is a daily chart, and we have some concerns, but it doesn't mean go selling your Bitcoin now. All it means is that you need to display patience and do not go adding more right now. What are we looking for here? We are looking for this lower support level here to hold. At current, we're trading down below it. But guess what? This is a daily chart. The day isn't over yet. So we can rally back to recapture. If we rally back to recapture, that would mean that we have support below, buyers willing to step in to bid the price of Bitcoin higher. If we do rally back and close above this upper band of resistance, I suspect that we would attempt to rally to take out this upper band of resistance here. Now, if we break out above this upper band of resistance, that's very bullish. We'll probably challenge the next resistance level, which is at the all-time high. But remember, as I always say, the test is always at the top. Do we break out or do we put in a lower high? So the key for right now is to be prudent with your position sizing. Don't go overweighting Bitcoin, hoping when you should fear. Meaning, don't hope that it's going to break out above the upper band of resistance. Open up your position and be fearful. Because if we break down, you want to preserve your capital and look to stop out of the trade on a confirmation breakdown. Now, in terms of indicators, you're going to want to see your RSI here and your Stokes begin to hook up higher. Each are above the 50 level, which is good stuff. That's what you want to see. And I suspect that if we rally and close above this upper band of resistance, that these lines, these indicators should begin to hook back up again. And then as a whole, this chart becomes a bit more constructive. But as it stands right now, where first walking up, consider buying Bitcoin, I would avoid it right now. Why? Let's revisit. We are trading down below this lower band of support. We have the potential for a lower high. We want to see this line defended. If it does not hold, we want to see this 20-period moving average act as support. If not, if we fail, we have a strong probability of us pulling back to retest the 1400 level on Bitcoin. So no rush here to get long. Simply watch and wait. Okay, so now let's segue into our gold members' stock chart requests. These are the symbols that our gold members submitted for me to review on video. So let's begin with DPST. I'm going to say from the outset, I love DPST. We're going to talk about the weekly chart and the daily chart. I always say I have some very smart members, and sure enough, this is one of my favorites, to be honest with you. I wasn't sure whether or not to trade the FAS, which we booked profits on last week, or to trade the regionals. So there's still a chance that we'll go with the regional banks because of their exposure to loans, more so as a percentage of profits than the money center banks, because they rely less, meaning the regional banks rely less on trading and more on lending. So why does that matter? It matters because interest rates are moving higher. Yesterday on the week ahead commentary, I reviewed the chart of the TIPS, the Treasury Inflation Protection Securities. They are beginning to break out. I also reviewed the 10-year yield. It is poised for a breakout. So if the 10-year yield moves higher, that will benefit the regional banks' NIM, net interest margins. That's the spread that they make on loans. So back to the chart. Weekly basis, let's do a deep dive starting at the top of the funnel, and that is the higher level view. Weekly chart, we are in a triangle formation. I think we're poised for a breakout. If not this week, then the next. I would be a buyer of the breakout, and I would be buying more on a rally up and through this resistance level here, marking an all-time high daily chart. On a daily basis, we are in a triangle formation. We flashed a bullish key reversal on Friday after on Thursday failing to break out. Volume was very light on Friday. Warning flag is on the track. RSI, it has already broken out. So we have an indicator which is leading price performance. On Stokes, absolutely stunning setup. This is picture perfect. We have a double bottom setup, a W formation. Here's your pivot point here. Watch for a breakthrough this pivot point this week. And if we get that breakout, in all probability, the shares of DPST will be at or above this upper band of resistance. So I'm quite bullish on the money center banks. I'm very bullish on the regional banks as well. On an hourly basis, we have a nice tight trading range forming here. A good close on Friday on volume. This is a 1 hour chart if I didn't mention that. RSI hooking up, Stokes hooking up. I am very bullish on DPST, but I would wait for the breakout on a daily basis, and we may just be joining along with you. The next chart up, XLB, the materials. I have been bullish on materials for a long time now, and they have had a very long bull run. We have RSI at 81.57. Stokes is still strong, making higher highs, beginning to flatten out a little bit. We are trading well above the 2 standard deviation Bollinger Band, and we're kind of extended here beyond the 20-period moving average and 50-period moving average. Would I buy here? If you're a momentum trader, sure, buy the new intraday high with a tight trailing stop loss order. But if you're looking to swing trade this, I think that you're going to get a better risk-reward entry point, because as I mentioned with members on the week ahead commentary, which is posted on the website yesterday, being Sunday, I mentioned that the major averages are overbought and that if we get a correction, pretty much every sector is going to get impacted to the downside. Now, some more so than others. And out of the ashes rises the phoenix. What does that mean? It's gibberish for we're going to get new leadership. And I believe that you're going to see the materials name, commodities, energy, the banks, they will assume leadership. So long story short, XLB very bullish on. I would wait for the pullback, ideally to the lower band of the rising uptrend channel. If you're long right now and you don't want to exit your trade, think about selling some covered calls, bringing some income. The next chart up is ELF. Never heard of this one. Elf Beauty. Weekly chart. Not a ton of data here. It only goes back to October of 16. All right, so we were in a long-term downtrend channel, and that all ended here, the week of November the 27th. We broke out above this upper band of resistance, and more importantly, we closed there. The following week, we pulled back, retested the breakout point. We did it again here, the week of December the 11th. What does that mean? It means that traders wanted to test to see whether or not this current support level, which was prior resistance, would hold. And it did. It held twice. Now, we attempted a rally, but we have some sellers above between 23.85 and 23.33. And you could see that each week, with the exception of the week of December the 11th, we saw topping tails on all of these candlesticks, these weekly candlesticks. What does a topping tail imply? Some call it a wick, a shadow. I call them topping tails, call them cupcakes. It doesn't matter. What it implies is that buyers back here and here, when support broke and they thought they were getting a bargain, now they want their money back. They're not looking for a profit. This is called overhead supply. So on a weekly basis, we'll go to a daily chart in a moment to see whether or not we have a better setup. But on a weekly basis, we're kind of in no man's land here. We have support at the rising 20-period moving average. We have resistance right up here at 23.33. Ideally, you get a breakout above this upper band of resistance. That means that the bulls would have fought through all of this overhead supply, which I can't believe there's that much of, given the length of time the shares have been trading publicly. Now, on a daily basis, the daily chart we broke down on RSI. We were in a ever-tightening triangle formation. It failed. It broke down. Now, we broke out on a daily chart on December the 4th. Rallied, failed. We broke down bull trap, broke back down into this trading range. It regrouped, rallied again to break out on December the 15th, consolidated, failed again. So we have a breakout point failure or a bull trap. Now, I know many of you are out there, you're looking at the chart and you're saying, Jesus, I would love to, I love the story. Whatever the story is, I have no idea. And you want to buy that story. Don't. It impacts emotion, and emotion has no business when you're looking at the charts. So what you want to do is wait to see how the shares trade, at least for the morning on Monday. Do we make a low below 21.50? If we do, it's probably going to be a weak day. Now, if we rally up and through the highs of Friday, which was at 21.10, interesting. Then you may want to consider scratching the itch, assuming that we close above this dotted blue line, which coincides at about 21.60. That's the line in the sand. If we fail and break back down below this dotted blue line, or more significantly, this support level here in green, you want to avoid the shares. Then after you scratch the itch, and ideally it holds for you so you can make a few bucks, add more to your position on a breakout above resistance. You want to make sure that the bulls are in control. Right now, given the breakouts and failures, there's a tug of war going on here. Volume on Friday was good, but you saw some sellers move in and take the shares off the highs of the day. I don't like the Stokes here, guys and gals. We have a lower high on Stokes. Both lines on Stokes trading down below the 50 level. I have a rule. I do not buy stocks when you have both lines on Stokes trading down below 50 and are declining. Why? Rallies fade. Take note of what happened back here. When we cross below the 50 level on Stokes, let's move the Stokes above price so we can illustrate. Okay, so as you can see here, we had broken out, failed, we broke down, the Stokes dropped down below the 50 level. Every time we tried to rally, by the end of business, it failed. 1 day, 2 days, 3 days, and then finally we began to hook back up again, and we got some wind to the back of ELF. But be careful with these Stokes. They're making lower highs and lower lows. I do not like that. So be careful. And that doesn't mean if you're long of the shares, you go dumping them. I would put a stop right below Friday's lows. Why? It's because if we make a new weekly low, in all probability, we're going significantly lower. So just be careful here. Facebook, weekly chart. We've been watching Facebook for several weeks now. Rather than trading Facebook, we took on a trade of the leveraged ETF of the triple Qs, the TQQQ, and we booked profits there. Facebook has broken out above resistance at 184.25. We closed out the week last week at 186.85. We have RSI rising, Stokes are rising. Volume was light last week, so just take note of that. No institutional demand on a breakout. Warning flag on the track. Daily chart. A clean breakout. Volume was good at the beginning of the week, but it drifted down. Stokes are looking good. RSI looking good. A bullish key reversal on Friday and a new daily high. I think that the shares will probably push higher, but I'm just concerned about this volume. MACD histogram continues to gain momentum. Facebook, thumbs up. If you're going to momentum trade this, momentum trade it on a new daily high and keep a tight trailing stop loss order. If we start blowing through this third standard deviation Bollinger Band here, think about keeping that trailing stop really tight. Preserve your profits. NUGT. This is for fellow member Scott. We are currently long of NUGT. And Scott, I went over NUGT on a macro view on a monthly and weekly chart on the week ahead commentary yesterday. So you may want to refer back to yesterday's commentary for the higher level view of NUGT. But for the purposes of discussion today on a daily chart, which I did not discuss yesterday, we are in a tight wedge formation. Now, if the dollar continues to break down, I would expect NUG to rally. If the dollar strengthens, I would expect to see this support level here at the $33 per share level to fail. So I would not be a buyer of more shares here. We've been accumulating fairly aggressively over the past several weeks. So me personally, I'm going to wait for the breakout. And if we get the breakout, I think that we will easily head up to $36 per share in a heartbeat. So right now, I would wait for the breakout on NUGT. With regards to RSI, we're seeing lower highs here. It's a possible double bottom setup. Nothing really to trade off of per se, just something to keep an eye on. Stochastics are rolling over. Volume on Friday was very, very light. We have a double top in green on ADX and a double bottom in red. MACD histogram is leveling off. So what we would want to do is certainly move our stop up right below this lower band of support. As a matter of fact, I'll enter on the trading desk where we're going to put our stop loss order for NUGT. I'll do that this morning. Just hover over the little notepad symbol there and you'll see the text. And I'll also enter a note on Head Trader Communications in the members area. Just click on the trading desk icon on your dashboard. 2-hour chart. You can see we're struggling to push through 33.50 and 33.72. If we can get above 34.15, again, I think we're heading up to $36 per share in a heartbeat. This struggle is beginning to get reflected. Let's update the chart. And the indicators, which are weakening a bit. Okay, so we have Stokes, which continue to rise. The RSI, which looked as though we had a double bottom setup forming, it's kind of gone lethargic now, and that's due to the price action, just simply in a stalemate. So this is going to get resolved probably today, if not tomorrow, in one direction or the next. Up volume is dropping off here a bit. We really need to see the dollar begin to break down. We need some clarity on the direction of the dollar. The dollar has yet to make a new 52-week low. If we do make that 52-week low, I think that's going to be the green light for traders to go piling into NUGT. And we'll discuss NUGT again tonight on Members Market Wrap. Cannabis Sciences, I discussed this one last week, and here's what I had to say about Cannabis Sciences. Cannabis Sciences weekly chart. We are very extended here. It can go higher. It's a penny stock, very volatile, and a lot of amateur money. It's no offense, but you have a lot of amateur money chasing these shares higher here. They're not appreciating where we are on a relative basis. And on a relative basis weekly chart, we are trading above the third standard deviation Bollinger Band. And you could have said to me last week, Bob, couldn't you have said that last week? Absolutely. But it all comes down to the discipline, folks. Are you going to buy when the shares are already extended, or are you going to wait for a consolidation to open a position, then buy the breakout? I would rather wait for the consolidation and buy the breakout. My risk reward is far better than chasing the shares here. I digress. The weekly chart, despite the negative tone I have, is still very healthy. The path of least resistance is higher for CBIX, daily chart. Daily basis, we cleared resistance yesterday. It looks as though the Stokes want to hook up higher. We have RSI rising after putting in a double bottom setup above 50. I could see these shares moving higher. If you're going to buy them, you're going to chase it, fine. Use a stop right below yesterday's lows. It'll take you out if we fail to hold this breakout point. Okay, so here's the same weekly chart. We did, in fact, make a new high. We rallied up to 14 cents per share where you had prior resistance. And you saw sellers move in, overhead supply. These buyers back here who held through this swoon, they wanted their money back. So it was logical to see sellers at that level. And I mentioned the stock was volatile. It was halved within the week last week. So from the high of 14 cents, it found a low at almost 7 cents before managing to rally back to recapture support. Now, daily chart. Take note of the fact that the shares have a fondness for the rising 20-period moving average, and the support level here is critical. So if you're going to buy the shares, fine. Keep it small and keep a stop right below this support level here, and then buy more on a rally up and through 11.5 cents. And once you get above 14 cents, back to the weekly chart, the shares will head up to 19 cents, last seen back in December of 13, then up to almost 30 cents. So the chart still looks good. Expect volatility and learn your support levels, folks. They're critical for keeping losses small and identifying where you would want to get involved with a purchase of the shares. The next chart up, weekly chart NBIX. We broke out last week. The path of least resistance continues to be higher. In fact, I believe this is an all-time high. Yep, this is a quarterly chart going back many, many years, and we are at all-time highs. So why does that matter? Why does it matter that we are at all-time highs? Why is that significant? It's significant because you don't have any buyers from several months to several years ago who have been sitting with the shares wanting to sell. This is what I call clear blue skies, no resistance above, not a cloud in the sky. So we had a clean breakout last week. How was our volume? Volume was average. You'd like to see that higher on a breakout. Stokes are rising, RSI is rising. I think that it's a healthy breakout, looking good. Daily chart, very nice. So from a risk reward perspective, the chart is looking good because we rallied, we pulled back, we flashed a bullish key reversal off of support, which is exactly what you want to see, and we closed very close to the highs of the day on Friday. Volume was about average. Again, it could be better. So I think that these shares, if you want to scratch the itch, put on a small position, you could do so using a stop right below the support level here at $78 per share, and then add more on a breakout. You want to buy strength. And that's it, folks. Everybody have a profitable trading day. Members, we will have a market wrap this evening, and we'll talk about the day's events. Be well.